Hello everyone and welcome back. I'm Colin Sweetman from First Accounts and this is episode 2 of Financial Understanding. If you're a business owner that's just getting started and you want a good overview of bookkeeping, then this video is perfect for you. From our learning platform, you can also download the spreadsheet Accounting 101. This is a great spreadsheet for which you can use as a cheat sheet for whenever you need to remember certain things like debits and credits. In this video, we will explain the basics of bookkeeping, why it is important for compliance and management accounting. We will also go over debits and credits and what they are, and why information is important on each sales and purchase invoice and bank statements. Trust me, if you get bookkeeping right from day one, you will save thousands of euros. We also go through the key steps to doing your own bookkeeping. Bookkeeping is defined as the ongoing recording of financial transactions conducted by a business or other organisation. This includes purchases and sales and all forms of expenditure and income. Traditionally, these records were kept in physical books called account books, hence the name bookkeeping. So why is it important? There are two main reasons why businesses need to keep good records. One is compliance and the second is management. I'll break these down into 5 further pieces. Compliance essentially means that you need to keep records for the purposes of taxes and regulations. Management means that we keep records so that we can utilize this data and use it in our business. 1. Taxes. If a business buys or sells goods and services, then it is very likely that tax will come into the equation. Keeping a good set of records ensures that you are claiming tax deductions where appropriate by not overpaying tax. It also means you won't be underpaying tax and exposing yourself to unnecessary large fines. 2. Compliance. If you set up as a sole trader or a limited company, it's very likely that you will need to comply with Irish reporting standards. Limited companies also have more reporting requirements than sole traders, so think very long and hard before you set up your limited company. Number 3. Errors. Good bookkeeping will help prevent errors in your business. It will ensure that you don't forget to pay key suppliers, or worse, pay them twice. It will also ensure that your customers pay on time and in full. Number 4. Stakeholders. Bookkeeping contains data that investors, lenders and potential suppliers may want to see. Not only does good record keeping show how organised you are, it will also give key stakeholders a true and fair view of your business. Having messy or missing transactions is a big red flag to banks and venture capitalists. In fact, they generally have very grand expectations about how well you know your numbers, and you're unlikely to know them if they're not being recorded properly in the first place. Can you imagine how much more difficult it would be if you had incorrect financial data? Knowing your financial transaction history is a key benefit to good bookkeeping. It can tell a story all on its own and will help you predict where your money is going by allowing you to create budgets and cash flow forecasts. This is something that is essential to growing your business. How else will you know how well you are doing? It will also allow you to notice trends and seasonality in your business. The first step is to separate business and personal expenses. It is essential that these are not mingled together, so the best way to ensure that this does not happen is to open a separate business bank account. If you are considering opening a limited company, then it is essential that it banks through its own bank account. You must do this as a matter of law. The next step is to choose between single entry or double entry bookkeeping. Single entry bookkeeping is fairly simple as it's basically just a list of transactions with backing documents attached to them. It is okay to start like this, but it gets surprisingly difficult to keep transactions in this method the more complex your business will get. Therefore, I recommend that any business starting out should start with double entry bookkeeping straight away. When you hear debits and credits, this alludes to double entry bookkeeping. Double entry literally means entering transactions twice on a ledger. The easiest way to get your head around this is to think about transactions as not just appearing out of thin air, but rather moving through spaces. So let's say I'm standing in the kitchen and I want to move to the sitting room. The transaction that would take place, therefore, is credit the kitchen, or rather leave the kitchen, and debit the sitting room, or rather enter the sitting room. This is the premise of double entry bookkeeping. It is essentially describing the movement of value. The third step is to choose between the cash basis of accounting and the accruals basis of accounting. When using the cash basis method of accounting, you only recognize revenue once you have received the cash for that sale. On the other hand, the accruals basis method of accounting recognizes revenue as soon as you finish the work or deliver the goods and an invoice has been raised, not when the cash has been received on this. Most businesses starting out will use the cash basis because it is really great for cash flow. In Ireland, it's even better because while you don't have to recognise revenue for tax purposes until you receive cash, they do not apply the same rules to expenses. Expenses can be recognised for tax purposes as soon as they have been delivered or invoiced to you. If your business does well enough, you may need to switch to the accruals basis of accounting. For instance, if you are a VAT registered person whose turnover exceeds or is likely to exceed €2 million in any continuous 12-month period, or a VAT registered person whose supplies are almost exclusively, at least 90%, made to customers who are not registered for VAT or entitled to claim a deduction of VAT. Either way, you should talk to your accountant to find out which method is best for your business. Step 4 is to choose a bookkeeping system. Most businesses start by recording transactions on Excel, but you will soon find how cumbersome and prone to error this process can be. There are, of course, still desktop programs available for accounting, but generally speaking, more and more businesses are becoming digitally connected on the cloud. Cloud accounting systems allow you to use the cloud-based software from any device, allowing small business owners to stay connected to their data and their accountants. With a cloud accounting system, you can easily integrate software with your whole ecosystem. It's scalable, cost-effective, and very easy to use. Let's look at the other benefits that cloud-based accounting tools can offer your company. Number 1, best-in-class security. You're probably concerned about a cloud service provider storing your data, but the cloud is one of the most secure ways to store information. With a traditional accounting system, if someone were to steal your computer, they would have access to all your accounting details. With cloud accounting, though, no one can access your data unless you have the login to your cloud account. Cloud-based accounting solutions also protect your data from natural disasters as they have service in multiple locations, and you can even invite other users to view the data with limited access. Cloud-based accounting companies ensure that the security and privacy of your data is always airtight, and they're constantly making updates to guarantee this. Number 2, real-time updates. Not only are cloud accounting companies constantly making real-time security updates to your software, but these systems provide real-time updates to your data too. With a completely up-to-date view of your current financial situation, you're able to make better informed decisions about the financial future of your business. Number 3, paperless office. Keeping paperwork in order is a challenge and allows anyone to get their hands on your data. With a cloud-based system though, you can minimize your risk of manual errors and see results in a faster, more efficient way, allowing you to constantly stay on top of your finances. Number 4, customizable to your business. It's difficult to find a traditional accounting system that delivers everything your business needs in one package. Cloud-based accounting solutions allow you to integrate add-ons to be part of your entire ecosystem. They are built to be modular. This allows you to customize your accounting solution so you can have access to your invoices, sales, and customer engagement needs all in one place. In Ireland, there are a few very good cloud bookkeeping providers, such as Xero, Sage Online, QuickBooks, and Surf Accounts. You would usually pay a monthly subscription for these services, or it could come as standard as part of your accountant's overall monthly package. And mentioning that, it is a very good idea to get an accountant or experienced bookkeeper to help you from day one. The 5th step is to categorize transactions. This can be really helpful in determining different tax rates on different expenses or products that you buy to sell. Step 6 is to store and organize your documents. If you use cloud accounting, documents are usually stored as attachments to transactions. You are usually required to keep transactional documentation for a period of up to 6 years. This was quite difficult to do when files were kept in their original paper format, but I strongly advise that you keep files digitally in the cloud to avoid hefty storage costs. It also makes things easier to find, as you can use the search function to find them. I also advise that you make a habit of recording documents as soon as you receive them. This means taking a picture of a receipt with your phone if you or a staff member buys something at the shop. It can mean forwarding or uploading documents to a centralized portal as soon as invoices come in through mail. They can always be processed later, but at least you won't have to go looking for them. The best way to later reconcile these transactions is to look at your previous month's bank statements, in Excel preferably, and writing down on a new column whether you have the correct invoice or not. This ensures that you are not missing anything important. I only say this because usually the tax office will only allow you to claim tax deductions on transactions that have physical documents attached to them, where you can show them proof that tax was charged. For example, if you buy something for €123 and you are VAT registered, but you forget to snap that receipt, then you stand to lose €23 immediately, on top of another 12.5% for corporation tax later. So that what should have cost your business only €87.50 has now cost your business €123. So the next time you get a receipt, ask yourself if it's worth taking a picture of it to save yourself €35.50. But it's not enough just to get a receipt. You need to ensure that the correct information is on it too. Many businesses forget to do this, so make sure that you ask for a VAT invoice or VAT receipt. While it's great to attach order confirmations and credit card slips, these are not enough documentation or proof in and of itself. in order to claim tax deductions. Now, to flip this to the sales side for a moment, it's also important that you collect your customers' data correctly too. If you are VAT registered in Ireland and you sell to a customer in the European Union, you can reverse charge the VAT at 0%, but only as long as you collect their VAT number. In my experience as an accountant, I've seen countless business owners make this early on mistake. VAT on sales is something you definitely do not want to get wrong. If you undercharge by 23%, you will owe a lot of money when you have to go and claim that back. 23% is a large percentage of your largest number, revenue. And if you undercharge on VAT, you may be fined €4,000 straight away, and you'll have to pay interest on the underpaid VAT as well as the underpaid VAT. This underpaid VAT will have to come out of your sales, the things that were previously recognised as sales, or you can go back to your customers with a VAT only invoice. But for obvious reasons, most businesses elect not to do this. Of course, the best way to avoid this is just to hire a bookkeeper, even if it's only part-time at first. Bookkeeping is complicated and you will find it very difficult if you haven't experienced it before. A bookkeeper will do it better and faster. Your task as a business person is to focus on the business, not on the admin behind it. Bookkeeping takes you away from your business and probably at a higher cost than what it would cost a bookkeeper to do it. You should also note that most bookkeepers and accountants know which software for you to avoid and which one will save your business time and money. Trust their advice and you will create value in your business. Well, that's it for this episode. We hope it was useful to you on your business journey. If you have any questions, of course, please feel free to comment in the comment section below, and hopefully you'll watch the next episode and it'll be equally as useful to you. See you in the next one.